Hello everyone and welcome to the new market weather bulletin. Today is Monday, 10th of November, so time for a good Bitcoin deep dive on the chart in order to form some bias and to try to develop some plan for the trading week. Last week was not a brilliant week for me, so this week I will take it more easy, and I will try to focus on key levels where I'm interested to do business. So this market weather bulletin will be very important also for me to make sure I have a proper understanding of the Bitcoin price action. Before moving to the chart, a big shout out to Bluefin that is sponsoring this content. So if you enjoy watching my videos, make sure to support me and trade with me with Bluefin. You will find the referral link on the description below. You will enjoy a 20% discount on fees, and you will be eligible to the very cool campaign we run with the team. Also, before moving to the chart, make sure to subscribe to the channel, leave a comment and a like, and have the notification on clicking the bell. It doesn't cost you nothing, but it helps me to grow the channel. But without further ado, let's move to the Bitcoin chart and try to develop some trading plan. There was some nice development over the weekend, but as always, let's start with the high time frame chart to see if we can make some sense of the current Bitcoin price action. I'll start with the 12-hour time frame, but I think if we use the 10-hour, it's pretty similar. The daily is pretty similar, and the point here for me was to monitor more or less these two volume node after the drop we had in Bitcoin. Very quickly to show you this, mainly for a simple reason, because we still have an inefficiency where we are trading that is basically below and above these two key level. As you can see, over the past 12 months, so the price action you are seeing here in this visible range volume profile, in these 12 months, this area was an area rarely traded, the one from 105, 106 down to 97. There was not a lot of interaction, there was not a lot of volume, price didn't spend too much, market participants didn't spend too much interest on this area, and was a very inefficient area. So that's why it was an area was not having a very clear read, especially because this volume node here down was never really tapped. So I was expecting a further move down. That is, at least on my view, still absolutely not out of the table. This more or less to tell you the confusion that this area might create, especially because of this inefficiency that you can see here in the fixed volume range volume profile. But to start as usual, let's say with a naked chart to form some bias, very briefly, not much has changed since last week. We do have two important concepts. Somehow the market structure on high time frame remain bullish, even if we take this high and this low, because we never violated this low at 98k. If you want to be even more conservative, actually the high time frame structure is here down at 75. Technically, let's say, at least on my playbook, this is still an higher high, because you see here we created an higher high, so this is the following higher low before the next higher high. So this was the higher high, this is the higher low, this is technically an higher high because we broke above, so the following higher low is this one, because then we form somehow another higher high here, and this become a little bit more complicated. But let's say even in this, let's say, daily market structure break, we are still above this high. So market structure is an interesting spot, range, interesting spot for bullish positioning or long positioning. Range, it's a completely different story, because to me something has drastically changed when for the first time since 2023 a range was broken to the downside, and this due to this deviation we had here with this price action coming back. So this has never happened over the past 2 years and a half, when all the sideways price action have ended up being accumulation. So means that all the sideways price action that we had have somehow resulted in accumulation, so have been broken to the upside. All have been broken to the upside. None, except for small deviation, have deviated above and then came down. Actually, we always had the opposite. So deviation below, pump above. You can see it here. Deviation below, pump above. Deviation below somehow, pump above. Deviation below here. These are bullish deviation because happened below range low and are followed by an expansion above. So what we are witnessing right now is, for the first time, an important potential, or not potential, this is happening, so at least until it's not validated, a bearish deviation. So instead of having this famous bullish deviation below range low, we got a bearish deviation on the top, and this, in a range mentality, imply a visit to the other side of the range, at least until it's not invalidated. So this is the bias that, let's say, is for my playbook, on my style, that is not 100% right, is not always working, and is not something that I use to predict the future, but I use just to position myself and to have an edge in the market. This edge sometimes works, sometimes doesn't, always important to clarify, is giving me warning inside for a potential macro change on market direction. So in order to be a little bit more precise, I see here, let's say, a macro range. That is the big range we have been trading until here. That was potentially deviated to the above until here. Now you can see clearly was this range here we had here. Was broken to the above, retested. So for me, it was a legitimate breakout, expecting a move higher up, until this range was not technically deviated down below. So now this is again on my playbook. Again, I'm explaining my reasoning, but don't want to convince anybody. This is again a single range because we have deviated back below. How to be objective on this calculation on this level? We take the range started here until when it started to go sideways until it was broken above. Sorry. We started to range here, the range was broken here. So I want to know, first of all, is this range deviated back inside? So I take the value area I of that old range that we hoped was broken for good and we would trade much higher, but this, our hope didn't work because we deviated back inside this sideways price action, this range. So now, as long as we don't break above, we have to expect that the following price action will be inside again this range. So until this is broken above and we go back above, we have this bearish approach to the market. Now, once the second, let's say, range that you can consider is the range that we had been forming here above, where we have been trading since July. So we have a 1-year-old range that is the bigger one, and then there is, let's say, this one that is part now again of the bigger range we have, but is still a considerable sideways price action that lasted for 3-4 months. So also this range is interesting, and we can want to double check if the price has lost that range. So we check this range until it was broken down, and we can see that value area low, in this case of this range, has been lost. So we do have two information here. Try to make the explanation more logical and explanatory as possible. We know that since we are back below value area high, we know that we are back in this range. And since we are below value area low of this little range, we know that that range is lost. So this is a fact. It's something that is happening in front of our eyes. It's not a prediction. It's a fact that this is what the price action is telling us. And there is, I would say, no interpretation on this data. Then you can say, I don't give a fuck about fixed volume profile, I don't give a fuck about ranges or whatever you want. But for a range trader, this is an objective way to see this level and to know that this bigger range, let's make it like the red range, that the price deviated back inside the big red range because of this bearish deviation, and we are below once again inside value area high. And the second information we have, that we can also double check a second range where we have been trading. This is a 1 year old range, the bigger one. This is a 4 months old range where we had this sideways price action. Also, we know that the blue range, the smaller range, the 4 months range is lost because we are below value area low. At least if you use the fixed volume range volume profile, and to be super transparent with my setting that are pretty generous, because I'm using a value volume area of 90. So let's say it's a bigger wide range that is considering a wider area. For example, if you use the 70, that is usually a standard way of checking the range, we still get a similar data. Probably this value area low is much higher. But let's not overcomplicate this. So we know that we are back inside this range, we know that we are below this range, and we have a clear, let's say, invalidation of this current view on the market, that is this level. The level that goes from 107 to 110, let's say from 108 to 110. We know that as long as the price of Bitcoin doesn't manage to reclaim this gray area, to be a little bit flexible, we are in a potential bearish retest of these two levels. So if we trade here and get rejected again, we know two things. First, this resistance, support, chop here. We know that this level was resistance, becomes support, now is again resistance. And we also know that we are confirmed to be in this range because value area high of the old range is acting as resistance, and also we know that value area low of the smaller blue range is also acting as resistance. So this to me is a no-brainer analysis of this chart from a range perspective. So as long as we are below here, this level is to be considered resistance, and as long as we are behind here, this little range is lost, and as long as we are below here, this little range is to be considered as a deviation or manipulation in a very classical power of three move. Accumulation, manipulation, expansion to the downside. So as long as things stand as they are and we don't reclaim this one, I find acceptance above 108, 110, for my training as a range trader, this is a super no-brainer. So this is my view on high time frame. So action, how I can find actionable way on trading this area is an interesting area for a short, first of all, because resistance, support, now is potentially resistance once again. So this area 108, 110 in terms of bias, let's say, is an interesting area for a short, also because this locally is a downtrend. So we know that locally we are forming lower low. in this specific trend, and we are forming our low. So potentially somewhere here, if this trend is to continue, lower low, higher low, lower low, potentially higher low exactly here, and we continue to do what we have been doing since the 3 of October, since we started downtrending. So this is my stance on high time frame. Now we go a little bit in lower time frame to see if we find something more actionable, but we know more or less what we are looking for. Also, sorry, very important to map as a level on high time frame. We know that this is an important untapped low at 98k. Let me make this a little bit smaller. And we know that just below there we had two important level. First of all is the point of control here, that we can also map it for the wall range that you see is more or less there. So this is the point of control. Now I map all the range of all this mega range, and we also know that there is this little demand. So high interest in this area should we get a dip for a possible bounce, both from a range perspective and the demand and supply perspective. Not sure there is still anything relevant on Fibonacci, because you see the Fibonacci level are exactly at the value area low of this big range now. So this become a big catalyst, let's say, should we go down here for two perspective. One is the 75 of this leg here, and second is the value area low of this big range we have been trading for 1 year. But it's 84, so at the moment it's not really actionable. At least we don't have a very big capitulation. For the moment we focus more on this level, and we know that should the price, now that we are zooming in, we know to the upside we already mapped some level, we mapped also some level on the downside. So we zoom a little bit further on the 4 hour, and we look what is the most recent price action, and we saw that there was a little sideways price action here. There was let's say from the 4th to the 6 days of sideways price action here. Let's say I was expecting, many people was expecting this low to be a lower low to sweep there. It never happened, and the price action somehow started with this squeezing here, and there was the first breakout that looks legitimate, and now we are holding them there. So on low time frame there is some bullish instance because we had an accumulation that broke to the above. So until price doesn't break below here, we have to expect that there will be some sort of expansion here. This expansion, again, in my view, for a proportionality point of view, a 6 days accumulation should not lead, or usually is not leading to a huge expansion. So for the moment, I'm still a little bit cautious for the long side, and I'm more interested for a potential short positioning. So we map a little bit liquidity level, supply and resistance, and we know that here there is some sort of equal high. And we also know that actually here the high were taken out. So as you can see, the difference on these two price action, there was an high, there was some sort of sideways price action, a little deviation, a little sweep, and then the price dropped below. This has not happened here. So from a liquidity perspective, this area is not that interesting, the 115, while this is more interested because it could create something similar to what we have here. Again, not a prediction, just the interest in terms of liquidity level. That level is of course also interesting because, as you can see, this equal high, let me map everything properly. Equal highs, non-equal hugs. We would like the price to hug us, but usually not, it's usually fucking us, so equalize is a better term. So we see that these equalize are more or less in the level that we have mapped before, that is the resistance, value area high of this bigger range and value area low of the smaller range, and our level of interest. So now price is chilling here. We also know that this level was already deviated, and probably someone will also tell you that this is potentially another range. I know we see range everywhere, and potentially we could visit range high here. So at the moment, for me, with this current price action, you see locally we did have some positive movement, we did have a low time frame market structure break, so potentially we can still see this forming as a bullish momentum in terms of scalp. So the first interest here locally could be on this renewed low time frame, 4 hour, 1 hour bullish move. Something interesting could be any visit here down here to trade to range, mid-range or range high of this consolidation. This is the first instance because here locally we can see this price action. Also, if I remember well, there is another sign of interest, that is once we broke, as you can see, this is the 50 level, once we broke above that range, exactly here, in this spot, exactly in this spot, we reclaim the 50 level on RSI. So there is definitely a local momentum picking up. That's why I think short should be still a bit careful, also because we are down from 125 until 99, $25,000. So prices already have a decent drop. So we can see that in the 4 hour there is some momentum. We can see in the 4 hour that this range was locally reclaimed, but we know that in high time frame this is a level of interest for short. So here I'm trying to, I don't want to confuse you, but I want to make you understand that this is a little bit a problematic area where it's easy to get some fuckery. Which kind of fuckery? Exactly the kind of fuckery we had last time we traded here. You see how much was fucked around this level before breaking down and going down below. That's why I am cautious to trade here. So the first instance, since RSI is reclaimed the 50 level, since there is a clear bullish structure here, would be to take a long as close as possible to range low, value area low of this level, and potentially using sub, fib confluence, and usual supply and demand levels. Either here conservative or more aggressive here, along with this consolidation. This would be an interesting spot for a potential long into a range continuation, somewhere, something that look like this, and the setup would be this, with very strong taking profit at mid-range, that in this range is exactly here in the middle. I think you don't see it because it's exactly at this red line, and then to see the potential consolidation above. So here, for the low time frame reason that I explained, the first interest for positioning is a dip here, move here, strong take profit at mid-range, value area high of this level, the support and resistance on a time frame, and this would be then a risk-free trade in case we got the dip. So this is the first interest. The second interest is the high time frame potential reversal trade that would continue this downtrend that we have more locally. So price is fractal. Here we have an uptrend, as also here we had an uptrend, you see, that you could have traded here with a move there, but then price submitted again to the high time frame trend. So bias can be multiple according to the different level, different time frame, due to the fact that the price is fractal. The second interest, as I was saying, is shorting as close as possible or potentially after a deviation here. Because I don't like purely to trade this level, as I explained for the chop we have here. This area to me has already been deviated, so the maximum interest would be here for something like this. How this should happen? So we know here there is liquidity, we know that this level is interested, we know RSI is showing momentum. What we want to see momentum picking up on RSI. And ideally, we want to see exactly something that we saw here. So should this price be visited with some sort of price action like this would be the long. Price would then form another high, potentially the third high here. This would be really a text move, a textbook move, where on this move we would like to see market would be very kind, let's say, not an expectation, but we would be thankful to the market if moving there we would see something that is similar to what we had here in terms of RSI. So a similar move to the one we had here with a decreasing RSI, a nice sweep on this high, and then a potentially moving lower. Similar in terms of price here, and in terms of RSI, something that would look again moving up, and then before price starting to correct and moving down, because trend respecting this bigger trend here. Okay, so let's say bigger trend here respecting this move more or less we had here. So these more or less sound like two plans. As I say, this week I will take it very easy, so I will not put blind trade. More I want to see how the price approaches this level. If you want to take this trade, it's important you take them with me, then I will show them exactly. On Bluefin, you will find the referral link on the description below. Bluefin is a super cool non-KYC exchange, so you don't need to share any personal information to trade on the exchange. You just need an email address and you are ready to go. It has a lot of liquidity, the interface is super smooth, similar to Bybit, and also by using my referral link you will be eligible to join the many campaign we run with the team. Right now we are running this campaign until the 19th of November. It's super cool because you do have 1 month. If you sign up as a new user, even if you are registered with my link, you can make a new user with another email address. You can get 30 days of VIP instantly. You can get up to $1,000 in bonus reward. For example, if you deposit 1K, you will get 20% of trading bonus. Also, you will get up to $9,500 in future bonus on volume. So I don't know, 1 million bonus, you get $129. As always, with all the campaign, make sure to read very well all the conditions here below, because if you don't respect this point, you will not be eligible for the benefit of the campaign. So immediately make sure to click the link below and trade with me on Bluefin. Going back to the setup, as I was explained to close, let's say, the video, high time frame, we are, let's say, still in a bullish market structure, but we enter a trouble area on high time frame once again because we deviated back inside the range. It's the first time we do so, and we know that a bearish deviation in a massive range like this is something that should not go unnoticed. When this bearish view on the market would be invalidated, if we reclaim the 108, 110 level properly and we find acceptance above, in that case, all this range explanation and craziness will be invalidated. But until as long as we are below 108 and under 10, with the explanation I give you, from a range perspective, we are still in the area of a bearish retest of a flipped support level that now is potentially resistance. Locally, despite front running this 98K and the demand, we see some momentum picking up both in price and RSI. Because RSI has broke above the 50 level. As you can see all the time we broke above the 50 level, there is at least some bullish momentum picking up. So short again on a time frame are something that could be seen interesting, but from my view, momentum and so on, probably still early. So the first interest would be to long this little range here that was deviated in a move where strong TP would be taken in case at around mid-range and this 108 and under 10 level, more or less looking something like this. Should the price continue to push further up, again, because of the high time frame bias and whatever, will develop interest in short at the 111.5 point something level because of the liquidity and because the fact that this level was already tapped. So that would be the first level of interest. Should that level be broken strongly like this, perhaps a second interest was there, but I think this is more actionable now. This is again another area of interest for a potential short. As clarified earlier, not putting blind beats blindly for this, because this week I want to be more present on the chart and take trade looking at the price action developing on low time frame. But this is more or less a potential plan for the coming days, and these more or less are the only two areas where at the moment I'm interested on doing business, looking at the current price action. Not interested to do business here in the middle year because I don't see anything interesting, at least on this time frame. I think is everything for today. Video is pretty long, but I want to give a very in-depth explanation. I hope you enjoyed. As always, if you have any question, make sure to drop me a comment down below. And as always, make sure to subscribe to the channel, leave a comment and a like if you enjoyed this comment. We'll see you in the next one, and I will share as always all the update I see in the market on X and Telegram. Take care out there, and we'll see you in the next one. Bye bye.